Oluwole-Oni is a distinguished finance professional with over 12 years of experience in corporate and investment banking, wealth, and asset management. As the regional head West at Norrenberger Asset Management Limited, she spearheads strategic initiatives to drive business growth, enhance client portfolios, and deliver innovative wealth management solutions for both individual and corporate clients. Holding a master's degree in international law and diplomacy and a Bachelor of Science degree from the University of Lagos, Oluwatodimu possesses a profound understanding of global financial landscape and excelled in navigating complex investment environments. Her expertise includes portfolio management, financial advisory, and business development, which enables her to create sustainable value for clients and stakeholders. Beyond her professional accomplishments, Oluwatodimu is a firm believer in continuous learning and excellence. She stays at the forefront of industry trends, leveraging her knowledge and network to drive impactful results. Her leadership, passion for innovation, and dedication to client success make her a formidable force in the financial sector. Please welcome Oluwatodimu Oluwole-Oni as she dive in to beyond research, wealth building, and financial independence for academics. You are welcome, ma'am. Thank you for joining us.
Okay, thank you very much, ma'am. This is a honor. I'm honored to actually be on this call today to have this session with this amazing community. Trust me, having to speak with scholars, people that are, knowledgeable as well, is just really a honor to have that conversation with you. So I'm hoping that this engagement would be fantastic in the sense that we're able to ask questions, we're able to learn. There's always a fantastic opportunity to learn at every point in time. So I'm, like I said, thank you once again. So I'm Oluwatodimu Oluwole-Oni. I currently work with Norrenberger Asset Management Limited, and today I would be speaking on Beyond Research, Wealth Building and Financial Independence for Academics. So at Norrenberger, I'll just start with this. This is our vision, which is to simplify wealth creation. Our mission is also to positively unlock opportunities in the society. And our core values are friendliness, innovation, responsiveness, simplicity, and trust. So we relate with our clients, irrespective of target markets or sectors. These core values guides us in our relationship with our clients as well as our business. So this is just a snapshot of the table of content of what I'll be speaking about today. Yes, so I'll start with wealth building and financial independence. So I'm sure you've heard about wealth building, wealth creation, wealth accumulation, financial freedom and all that. But have we really had time, despite our busy schedules, have we been able to, come up with one or two things that we could actually do, to enable us build our wealth and enable us have something to transfer to the next generation. So I'll just go right into the introduction, which speaks to, despite our busy schedules, our tasks, and the rest, have we found time, to start up something that will enable us build our wealth, to accumulate, which would then enable us transfer to the next generation, or which would even enable us retire well, So I'll just say, in order to start building, right, you have to be consistent and disciplined when building your wealth, because it just enables you achieve like a long-term financial independence as well as peace of mind. So I'll just go straight into what wealth building is. Wealth building is the process of generating long-term income through multiple sources. This requires, apart from the income you're earning from the grants proposals and all, you're able to also earn additional income, through your investments and other income generating assets. And this is, I would say, the base of wealth building and accumulation is determined by proper financial planning. So financial planning gives insight into your future financial goals. So what are these goals? In my next couple of slides, we'll see examples of what financial goals look like, and then we're able to then see what our financial goals are, and then craft a financial plan around it, and this financial plan has to be smart to enable you achieve it, and it has to be realistic. So there's a saying by Grant Sabatia: whenever we spend money, instead of investing it, we're actually taking from ourselves. We are taking both the time we spend to make the money and the future freedom it can buy. And there's also a saying by Warren Buffett: the key to financial planning is to build wealth slowly and consistently over time, which is what I said earlier on. Being consistent and being disciplined, enables us achieve this wealth accumulation. And the next is financial freedom or independence. What is financial freedom? What is financial independence? It's financial freedom, I would say, means having the resources and ability to live the life you want without financial constraints. Financial freedom means you have enough passive income to do all the things without having to worry about where the money is coming from. I had a conversation during the week where I had to speak about financial freedom and independence, where I said a lot of people experienced this blocker when COVID happened. So many things changed. People couldn't go to their businesses, people couldn't do things remotely, and they needed to earn an income. That was where the emergency fund came in. So for people who didn't have emergency funding, they had to then have to rely on maybe taking a loan or having to borrow from people, So financial planning allows you to create that buffer for emergency funding where, irrespective of whatever happens, you're able to have something, a buffer to fall back on, at any point in time. So I'll just go straight to investment. Investment is the commitment of one's resources to achieving a desired result. These resources may include time, money, knowledge, or skill. And I would say, to summarize it all, investment means putting your money to work. I would tell you how to go about it in the next couple of slides. So here is a snapshot of what financial goals look like. For us in the academic space, it might be, you might actually want to get an additional degree, or something. For the younger generation in the community, you're looking at starting a family, or you're even looking at going on a proper vacation that you haven't gone on in a very long time. For you to be able to do this, or you want to acquire a home, or start up a big project. But for you to do all this, you can't just dip your hands into your pockets and bring out these monies to fund these things. You have to plan towards it. So financial goals are things you desire or want in monetary terms. It guides you towards your destination. Setting your financial goal is the first step to efficient financial planning. It's the base of it. So I mentioned something about COVID. Now I'm speaking to a VUCA world. What is a VUCA world? It's something that is characterized by volatility, uncertainty, complexity, and ambiguity, which is what we currently face at the moment. It's extremely volatile. Policies come out on a daily basis. Sometimes you wonder, oh, what's happening? What's the trend? So there's just a whole lot going on. How do you maneuver your way around it? How do you build a financial habit in this world that we're in? The first thing I would say is to create a budget and stick to it. So in creating that budget, you're able to track your expenses. In tracking your expenses, you're able to look at, okay, how much do I earn on my tasks that are assigned to me? Likely expenses during this period. How can I reduce certain expenses? So there are some things that we feel like we should not, I would say, we might just be taking advantage of certain things. So for example, we might just be spending on things that we don't really need, you know. But in creating a budget, it enables you to see these things transparently, and then in highlighting it, you're able to see, okay, I can do without this month. Let me move this to the next 3 months. That's when I'll need it. So that way you're able to plan appropriately. Next is to set your financial goals. So what exactly are you planning to achieve in the next couple of years or in the next couple of months? You know, that enables you then build everything around it. It enables you create a structure on, okay, how much am I going to be contributing on a monthly basis or on a periodic basis to enable me achieve this goal? The next is setting up an emergency fund. Emergency fund can never be overemphasized because it is something we have to live daily with. You know, there are things that you have to fall back on at any point in time. And emergency fund covers at least 3 to 6 months of your living expenses. So you need to build your emergency fund to enable you cover 3 to 6 months of your living expenses, at least minimum. And the next would be to diversify your income streams. So what do you currently do at the moment? How can you increase your income streams? Increasing your income streams might not necessarily mean you might need to start a side hustle. It might just mean putting your money to work, you know, having an investment that puts your money to work and you're able to earn income from it, which is your interest that will be paid at the end of the period. You know, next will be to continuously seek knowledge, which I know the community continuously does, you know, financial literacy, which is this session we're having, you know, and another would be to seek professional advice. So we as fund managers are financial advisors. We are able to provide investment advice or how to build your financial plan if you're unable to come up with that. And next would be to say no to low sharks. So I would say use credit wisely. You just don't take loans because you feel you have access to it. You need to take loans when you can see a transparent way or mode of repayment. You know, I know of people who take loans, it's called margin lending, where you're able to take loans to actually trade, even in the investment space, and earn your income as well as pay back your loans, you know. So I won't advise that you take loans because you have access to it. And the next is coming up in setting up your financial plan, ensure that your insurances are active. So the likes of the health insurance, your vehicle insurance as well is covered. So you don't need to have to dip your hands into your pocket, you know, to have to pay for these things. Once you have your insurance sorted out, whenever there's an issue that needs to be addressed within that space, your insurance takes care of it. So you don't necessarily have to dip your hands into your pocket or even your emergency fund to sort this out. The next is to review, refine, and review. So yes, we have a financial plan. Yes, we have come up with our financial goals. However, you just don't set up your financial goals and set up your financial plan and go to sleep. You have to review on a regular basis, on a periodic basis, because we are in a volatile world, right? So what if you have set up a structure whereby you just need to be saving a particular amount of money for a certain period, and then inflation comes, you know, and then it creeps in and takes off everything, you know, you can now then engage your financial advisor to say, okay, you know what, I don't think I'm there yet. How can I achieve this? What do I need to do to achieve this goal at this point in time? How can I speed up this process, or how can I just invest in a very conservative manner, you know, where I'm sure that my money is there, and when I need it, I would receive it in full. You know, so those are the things that you need to check to monitor it closely and review it on a regular basis. So steps to achieving your financial goals. First is identify your goals. I mentioned it earlier. It has to be smart, you know, that way it's able to track. And then the next is to analyze your financial situation, your cash flow statements, and then also introducing the budgeting element. The next is to identify your risk appetite. So this is the base of everything I am going to be saying today. Despite the fact that you're setting up your financial plan, you know, it has to be in line with your risk appetite. Are you a conservative investor? Are you a high risk investor? You know, these things will then determine how to go about your financial plan. What type of instruments are you going to be investing in to enable you meet or achieve your goals? You know, and then the next is drawing up your financial plan, which is based on your risk appetite. And like I said earlier on, review periodically. So we're going into the what, who, why, and how of financial planning. So this just speaks to what needs to go into your financial plan. You have to factor in the inflation impacts, what do you plan to achieve at the end of at retirement? How much insurance do you need? And the rest. Your cash flow management also has to be put into consideration. So first is look at your monthly disposable income, and then the next is to apply the 50-30-20 rule. 50% is allocated to your needs, which are things that you can't do without. You need to buy food, you need to sort out your energy bills, you need to sort out certain things that can never be carried over. 50% is allocated to it. Once 30% is allocated to wants, and these are things that you can actually do without, things that you feel like, okay, this is when I need to do it at this point in time. And then 20% of your income should be allocated to investment. And at that point in time, by the time you factor in all this, it then creates a transparent scenario of how much you would have as investment or for investment purposes. So here speaks to our financial cycle. There are 4 stages of an individual's financial cycle. So the first is the consumption stage, and then the accumulation of wealth stage, and then the growing or managing of wealth, and then preserving, protecting, and transferring wealth. So the first stage, I would say, is between the 25 to 35 years, where you're able to start accumulating wealth, and also enhancing it to enable you achieve that financial goal. Then you get to a stage where you say, okay, you know what, I think I'm still accumulating. However, I need to start protecting it. I need to start putting certain things in place for my next generation. Then you then get to a stage where literally accumulation might not be possible anymore. So at this point, it's more of distribution, and then you're thinking of transfer. So what do you do during the consumption and accumulation stage? You invest aggressively. And then when you get to the consolidation stage, it's then time to protect and preserve, and then when it's time for dissipation, at that point in time, you're not actively working anymore. You just really need to plan appropriately, for these various financial life cycles. So why is financial planning important? The first is to improve your cash flow for better balance between income and expenses. The next I would say is to enable us retire well. After working so hard over the period, the end goal is to ensure that I have something, that I can fall back on that will make me enjoy my retirement, that my family can also get to benefit at some point in time. And then it helps you to increase your savings or your investments and optimize the growth of your wealth. So rather than just leaving your funds, sitting idle, and not earning anything, why not just put it to work? And then it helps you also to transfer assets, in the most effective way. So here is just a snapshot of what Warren Buffett and Benjamin Franklin have said about financial planning. Someone sitting in the shade today is because someone planted a tree a long time ago. If you fail to plan, you plan to fail. So this just speaks to the consistent need, or the need to just focus on planning for your future. How should you plan? I would say start now. There's no need procrastinating. And how often should you plan? I would say regularly, And remember I mentioned it has to be smart, specific, measurable, achievable, relevant, time-bound, and then you have to evaluate on a regular basis and then readjust. So this just enables you. So these are just the steps to build a financial plan. You set your goals, create a budget, you plan for your taxes, build an emergency fund, manage your debts, protect with insurance, plan for retirement, and then create an estate plan. So, habits that ensure positive cash flow. Basically, I would say invest wisely, avoid impulse spending, you know, and also don't spend money that you have not earned. Avoid debt like a plague, except it is needed, and then literally save for the rainy day. This is just basically what financial planning does for you in a nutshell, And then speaking about budgeting, it's a key component of financial success. It enables you to allocate funds appropriately and then creates that discipline because you have put in these things into writing. You've seen how much you earn, you've seen how much you spend, you've been able to come up with an avenue to track your expenses and then cut some of these expenses that are not needed or can be carried over into the next period so that it doesn't affect your plans to save or invest. So this just speaks to the power of compounding interest, right? So scenario A speaks to being consistent by depositing or investing a 20,000 naira monthly for 20 years, at an average interest rate of 12% per annum. 12% per annum is just being, conservative, same as scenario B, which is 10%, because currently we have products that, are able to give you an average of 20% per annum, but this is just us being conservative in case rates dip, to a particular extent where rates can actually dip to a 10%, 12%, but this is just an average over 20 years. So this means at the end of the 20 years, you're able to have a total value of 19.7 million naira. This means consistently investing 20,000 naira on a monthly basis. And this does not mean you have to carry on with a particular amount of money. It can be increased at some point in time based on your cash flow, based on certain allowances or additional inflows that you have received over time. But this is just a scenario that speaks to the future benefits, and the time value of investment, the power of compounding interest. So that's why I said there's no need procrastinating anymore. Start now, and then this just looks at the risk return curve. So remember I mentioned something about your risk appetite. Are you a low risk investor? Are you a high risk investor? So if you're a low risk investor, you should consider instruments around treasury bills, money market instruments. And then if you are moderate, you can start looking at the likes of bonds, and a little bit of bond related mutual funds. The low risk investors also can invest in mutual funds because we actually have low risk type mutual funds. And then if you're a high risk investor, you can start looking at investments around, commodities, equities, derivatives, and maybe a little bit of real estate, just to enable you achieve your financial goal. So these are common misconceptions about financial planning. You hear people say, oh, financial planning is for the rich. I would say no, it's not for the rich, it's for everyone. You need to have that plan in place. I am too old or too young to think about financial planning. That's not true. However, time you get to hear about this, the best time to start is now. Investment is the same as financial planning. No, you have to be deliberate, you have to be consistent, and you have to be disciplined. My children and my financial plans, they will take care of it. You'll be shocked, that you're going to be, you literally be on your own. So the best thing is, why not take care of yourself by setting up something, that would enable you enjoy in the future. And then saving is financial planning. I will say no, because in setting up financial plans, you should create a buffer where you can actually touch, and then you should also lock up some funds that would be for future benefit. So saving means you can actually go ahead and just use your ATM, take out some money and have a nice time. However, investment will not allow you do that. It's discipline, as well. So this is just a combination of Ponzi schemes that have happened over time, and I keep telling people, never invest in a company that would not give you evidence of investment. So you have put monies aside, they've told you you're going to earn a particular interest. But if there's no documents to show that you have invested in a particular product, that you can lay claim to, I will tell you to run, because how do you lay claim to it at the end of the day? So usually they meet you at every level. People that are influential to you would come and tell you, oh, I heard about this investment. Why not put your money there? There's usually a referral system, there's just all sorts of red flags. But because I would say times are hard, people just look for money doubling avenues. People fall for this. So the first is for you to start any investment with any reputable fund manager, you must need to confirm from these websites to be sure that they're registered with the regulator, which is the Securities and Exchange Commission. So they're the regulators of the capital markets operators. So once you can confirm and validate that this person or this fund manager is licensed, then you can go ahead with it. And then something else that I would say our regulators have done to ensure that investors' hands do not get burnt is the fact that they created a third tier, which is called the custodians. So most fund managers, I would say all fund managers are not allowed to keep funds with them. They only manage it. They only send out instructions and mandates to their custodians to carry out instructions in line with the agreed trust deed or agreed investment horizon. So, for example, if the company decides to say, oh, I no longer want to have anything to do with fund management business, I want to move into real estate or agriculture, all what would happen is the regulator would auction the fund to other reputable fund managers to say, okay, these guys are no longer interested in fund management. They want to start up something else. This fund is available for you to take up, and then it's given to another reputable fund manager after certain criteria have been met. And then your investment just carries on like nothing happened, So this system has enabled a lot of people to ensure that their funds are retained and investors will not get their fingers burnt. So I'll just go straight to our products and services because it would be, should I say, it wouldn't make sense if we speak about financial planning and then we don't talk about the products that you can most likely invest your funds in to enable you achieve those goals. So these are all mutual funds, right? Mutual funds are a pool of various investors coming together to invest, and then the interest or the income earned from that fund is shared across all investors based on the amount that was invested. So looking at the money market fund, it's a collective investment scheme that invests in Nigerian short-term money market instruments. These are the likes of treasury bills, bankers' acceptance, commercial papers, other money market instruments. I'll say instruments that do not exceed 1 year are called short-term money market instruments. So looking at it, it just allows you, I call it a traditional savings account because you are able to put your monies aside with a minimum of 5,000 naira. You're able to invest in the money market fund and earn as high as 22.59%. So the beauty of the mutual fund is that the rates are not fixed. However, it allows you to enjoy the high return on it. So, for example, investing a 5,000 naira in a bank would never give you a 22%. In fact, you can't even buy a treasury bill. But because you're investing in this collective investment scheme, you're able to benefit from the pool of investors, that gives us the negotiating power to be able to get this type of returns for you. And you can top up. That means you can add more money to your investment at any point in time. You can take your funds at any point in time, but there's a minimum lock-in period. So when you start investing in this fund, there's a minimum holding period of 30 days, which means if you come within the first 30 days of your investment, you would be charged a penalty fee of 20% on your interest earned. not your principal. And then if you decide to stay for the entire minimum holding period and then come after the minimum holding period to take your funds, you would not be charged any penalty because you have stayed the minimum holding period in that fund. So basically, it allows you to invest in a diverse portfolio than just focusing on buying one particular instrument. So rather than buying just one treasury bill, you're invested in a fund that has a combination of treasury bills, commercial papers, bank placements, and other money markets instruments. So the next one is the dollar fund. So this is targeted at investors who are looking at hedging against currency risk, and also provide some kind of liquidity to them in dollars. So this fund is targeted at people who are looking at investing in USD. In this fund, it's actually invested in sovereign and corporate euro bonds, and other dollar-denominated money market instruments. So it allows you invest in a diversified portfolio of dollar-denominated instruments. Return on investment is competitive and tax-free. So the current yield on this fund is about 9%. It does an average of 9% per annum. I would say we're currently the best in the market. Not that we're lucky, we just took advantage of when rates were pretty much okay, and this has impacted the return of our fund. So looking at this, on the dollar fund, you have a lock-in period of 90 days, which means if you come within the first 90 days, you'll be charged 20% of the interest accrued. And if you come after 90 days, you won't be charged any penalty. And then the minimum subscription is 5 units of the fund based on the price of that fund. So currently it's doing about 104. So I would say roughly it's a minimum investment amount of $550. So the whole idea of mutual funds is to enable people invest however little and build over time. I've seen people start small, and then at the end of the day, you see how much they've accumulated over time just because they are deliberate, consistent, and disciplined. And then the next is the Islamic fund. So this fund is targeted at investors who are, seeking returns based on their faith rates. This fund has been reviewed by the Sharia advisors, and it does not speak to it as interest, it speaks to it as profit sharing. And then because of the structure and because it's a regulated fund, we're able to invest strictly in Sharia compliance contracts, and we're able to give returns as high as 14% per annum on that. Remember, because of the current climate that we're in, it's a regulated fund. You can't just invest in any type of instrument. It is guided by the Sharia advisors. And then the next will be the fixed income fund. So this fund speaks to people who are looking at investing long term, and this fund has a little, I would say, a major element of bonds in it, which enables you enjoy the benefit of saving long. Usually this fund does fantastically well, when returns on the money market begins to dip, you then start to see how the bond market responds to this, and then the fixed income fund is able to, outperform in such scenarios. So this is, like I said, has an element of bonds in it, as well as other money market instruments. It also has a lock-in period of 90 days, and it currently does an average of 14% per annum. And then minimum investment amount is just 5,000 naira, but there's no restriction on how much you can do above 5,000. There's no restriction on it, so you can do as much as you want. And then for the investors who say, you know what, I don't want to do anything that has to do with fluctuation in rates. I want something that I can work with. So if you say, oh, I want you to give me your rates for 3 months, 9 months, 1 year, I just want to lock up my funds, for this period. The classic investment note speaks to it. So it's offered in both Naira and dollars. You're able to earn your returns upfront, quarterly, semi-annually, or at maturity, depending on how you want it structured. So all these products are used to enable you create your financial plan. So depending on how your financial goal is structured, you're able to use any of these products to achieve your goals. So for this, the rates are usually dependent on the amount invested and how long or the tenor you're looking at investing. So the rates are provided and you're able to invest, and then you earn your returns as you have instructed us to pay it out to you. So on the mutual funds, I forgot to mention the interest earned on all these investments are paid out on a quarterly basis, calendar quarter basis. So even if you invest, say, last week in December, if your mandate says, pay me my interest at the end of the quarter, we will pay you for the number of days that you have spent in that quarter. So the next is the treasury-linked investment note. So for investors who are looking at just investing strictly in anything that has to do with treasury bills and FGM bonds, we can actually help you purchase it. We can also help you come up with that bucket where you're invested in strictly just treasury bills and FGM bonds, which I would say are extremely safe instruments. The next is the halal investment notes. So this also speaks to the faith-based investors who are looking at investing in Sharia compliant contracts. We're able to also help you achieve that goal by investing in any of our halal products. And usually we like to discuss amounts and tenors, and based on that, the rates are then given to you, and then your investment letter is also issued to you also. And then this just speaks to our expertise in management of USD portfolios over time, where we have done over $19 million, and then on the fixed placements on the dollar end, we're doing over $30 million. And then if you're interested in buying Euro bonds, we also traded over $50 million in that space. So the next speaks to setting up something for our children, or even gifting. Sometimes you have people, friends or family who have kids, but you're like, what do I give this person as a gift? How do I give this child a gift? So rather than giving the parents money, you can actually use this product as a gift to the child, where with a minimum of 100,000, you're able to set up an investment for your children. And this investment terminates when they become 21 years old. So you can top up at any point in time. The rate is reviewed on a quarterly basis. Currently, it's doing an 18.95% on the Naira and a 9.5% on the USD leg of it. So next is portfolio management. So if you feel you have funds that you want to allocate into different instruments, a certain percentage of equities, a certain percentage allocated to fixed income, a certain percentage allocated to commodities or real estate, we can also come up with a portfolio management structure, which is based on both parties sitting together and agreeing on what is expected on both or from both parties. And then if you say you want us to buy fixed income instruments for you, we're able to buy it, Euro bonds, treasury bills, FGM bonds, corporate bonds, commercial papers, and all sorts. We're able to buy that for you, both at the primary market and also at the secondary market. And then this is a fantastic product that I feel a whole lot of people are sitting on gold mine, but are not aware. So this product is offered by a subsidiary of ours, Norrenberger Securities Limited, which allows you, recover your lost shares and dividends that must have been lost in the past. So for example, we have people or our loved ones who have bought shares in the past, and have not or do not even know where it is at the moment. They don't receive dividends. They don't even know what's going on there. This product allows you, retrieve these lost shares. And then if you're willing to trade or, consolidate, it allows you to do that. And so for the recovery of lost shares for loved ones who have passed, will require some kind of documentation to enable us, carry on with this search. as well. So this is the link. We can just do in our spare time. We can just, have this link, check without all the possible names we must have had over time, and then you're able to see shares that will pop up, either in your name or with the names of your loved ones. And then you're able to reach out to any one of us, and then we're able to start the process of reclaiming your lost shares and dividends. So I'll just go straight to Norrenberger. I have spoken about financial planning. I've spoken about products. Next is just to give should I say, a summary of who we are and how you can reach us. So Norrenberger is actually a financial service group licensed by the Securities and Exchange Commission. So basically what we do is we work with individuals, institutions, to help achieving their financial goals. So this is what the group looks like. We have the asset management subsidiary, which is where I am from. We have the infrastructure bank, which deals with developmental finance. And then we have the investment banking and business advisory business. So this speaks to people who are looking at mergers and acquisitions, capital raising, debt raising, corporate finance, business advisory, and all that. We're able to help provide that service. And then Norrenberger Securities Limited deals with securities trading. And then we have the pensions business called Norrenberger Pensions Limited. We have an insurance subsidiary called the IEI Insurance PLC. And then we have a fintech, that deals majorly with SME loans, and a little bit of fund management. It's called TransCredit Finance Company Limited. And then we have a digital banking, which is a digital bank rather, called ClearPay Microfinance Bank Limited, that is able to deal with, should I say, SME salary payments, salary advance, and all that, and also POSs for SME businesses. So this is our milestone from 2017 when Norrenberger was incorporated. We have grown over time. It speaks to all the acquisitions that happened over the period, and then just literally our milestones from inception to date. And then these are accolades and ratings rated by Augusto. And then our competence basically is investment and wealth management, securities trading, structured and alternative finance, liquidity and portfolio management, and enterprise risk management, which is the base of everything. We have a robust risk management system that does not allow us, invest in just any type of instrument, but strictly investment grade instruments. So these are some of our partners and clients who have given us the permission, to share that they are clients. And then these are some of our partners that we deal with. And then I just go straight to the board of Norrenberger. So our managing director is Mr. Padina Yinkere, and then our chairman is Mr. Ibrahim Aliyu. So this is just what the board structure looks like, and then the management team of Norrenberger. So I think this is actually, or this brings me to the end of my presentation. So I'm here. Thank you very much for listening to me. I'm here to take any questions that you might have. Thank you so much.
Thank you very much. One, I want to appreciate Madam. We don't know how to thank you for the golden and excellent presentation, a rare opportunity that we have all enjoyed this morning through your presentation and the platform provided by Age. I don't know where to start, but it's just that personally, I felt I have been exposed to this before now. I would definitely have been better a civil servant and a better being. But it's better late than not starting at all. Madam, you have opened our eyes You have not just opened our eyes, you have lifted us to the tomorrow we are looking for. We want to say thank you very much. Whichever time you have spent with us and whichever knowledge you have shared with us, the Lord will replenish you. For Age, the great work Age is doing through these webinars that is lifting people up. Age and his team, God will lift you up. I don't have much to say, Madam Oluwatodimu Oni. I don't know if I pronounce the name very well. We want to just say
Yes, sir,
your presentation.
Yes, sir. Thank you so
Your
much, sir.
presentation is wonderful, great.
Thank you, sir.
You might have seen, or the Age people might have seen a lot of questions requesting that if this slide could be made available, but Age
Yes.
have answered the question that the whole thing will be on the YouTube.
Okay.
That is to show to you that you do not just touch the problem of millions of Nigerians this morning, but you have also solved. Information is a great resource. This information we have gotten is greater than money. We want to give us more opportunity. When Age approach you for another time, kindly make yourself available for us, for you are touching
Yes, sir.
humanity.
No problem,
Thank
sir.
you very much. And
Thank you,
we
sir.
are pleading with Age that please grant us more opportunity to listen to this. Some of us are slow learners. We want to hear this more and more to be better being. We are pleading with the Age directors and his team to kindly help us that other time can be given to us to hear Madam. Thank you very much. God bless you and grant you a
Amen.
great
Thank you,
day.
sir. Thank you, sir.
Thank you so much, Dr. Lawrence. Thank you. It's a pleasure to have you on the platform to give us the vote of thanks for this excellent facilitation. We are going straight to our questions now, but before then, I'll quickly address the question of the slides and the recordings. Yes, just like Dr. Lawrence has said, I'll buttress on that. The recordings and the slides will be made available to us on our YouTube channel. Just like I said during the announcement, we have a whole lot of series there on the YouTube channel, and this one will also be dropped there. So you could check. I've seen a list of long questions, and I know some persons are on the queue to ask this question. So I'll quickly like to answer it so that we can drop our hands if that's our questions. The YouTube channel will be there for us to ask our question, and the link has been dropped. So just click on the link, subscribe to the YouTube channel, please. Don't just watch and then take a walk. Subscribe to the YouTube channel, and after watching, like, share with your friends and share with persons. Let this go very far, because a lot of persons need this kind of training to be able to know how to manage their finances. And please, the recording is only what you are going to upload on the YouTube channel. The slide will only be made available to those that will fill the feedback form. After this presentation, we are going to release a form, that's a feedback form, which we expect every participant to fill. So if you're interested in the slides of our facilitator, which is actually very robust, kindly fill the feedback form so that you can have access to the slides. So thank you so much. We'll move to our questions now. Over to you, the moderator, ma.
Yes, ma'am. Thank you, ma'am. Now we have Olajumoke. Can you please have your ask your question now? Okay, can we have Zaharaddin? Zaharaddin.
Yeah, hello, sorry, it's morning in Nigeria. Good morning.
Good morning, sir. You're welcome, sir.
Yeah, thank you very much, moderator, and thank you very much, presenter, for that excellent presentation. Uh, my question is actually one of them has been addressed already on the slide, and the second question is, when we registered for this webinar, there is a link for us to join a WhatsApp group, but it seems like the WhatsApp group is either filled up or inactive. We couldn't join. I don't know if you know about that, or if you already have another WhatsApp group that we can join, because when we try to join, it's like either the group is inactive or filled up. I don't know if you can look at that. Now, my second question is still on the, we all know the condition of service in Nigeria, our meager salary and too much workload. I am currently not in Nigeria, I'm doing postdoc, but the year I left Nigeria, my last semester, I taught 5 courses, for example. And one of those courses, I have over 600 students. So you will see that almost every day you have lecture, you have students to attend to. So there will be no time for you to even go for any other source of income. Now, as an expert, please, what advice can you give us so that we combine our job and maybe another side hustle? How do we manage our time very well so that, because we all know the salary is not enough for us now. So how do we combine our work and then any other way by which we can increase our income without really sacrificing our job? Because in our job we're supposed to teach the students now, and we don't have any time for extra income. Now you want to do some other things. How do we manage our time? That's just my question. Thank you very much for giving us time to listen to these experts.
Okay, thank
So
you
that's
very
my
much, sir.
question.
So, okay, thank you, sir. So I wanted to ask what the structure is. Should I answer each questions, or we just take a bunch and then we address together?
Okay, that depends on you, ma'am.
Ma,
If
let's-
you continue to
Okay.
take it one after the other, or if you could take 5 at a time so that you make it easier and smooth.
Okay, so that's fine then. So we'll
so-
just take the next question then.
Okay. Please, before the next question come up, on the WhatsApp group, when you fill the feedback form, there will be a link there for you to join the WhatsApp group so that you can join Age and get to see all of our updates. So kindly fill the feedback form. The link will be dropped there for you to be able to join the WhatsApp group. Thank you. Our questions, please.
The next person is Adeola. Adeola, can you please unmute, ma? Adeola, can you please unmute, ma? Okay, let's Bala. Mr. Bala, can you please unmute yourself, sir? Okay, we have Chineye. Chineye, can you please unmute yourself, ma? For the question, you raise your hands up. Can you please unmute yourself, Chineye?
Yes, thank you. Good afternoon, everybody. Good day. Thank you so much. Okay, can you hear me?
Yes, ma, we can hear you very well.
Okay. Thank you so much, ma, for the lecture. Please, ma, I want to ask on your take concerning taking loan to start up a business, because I've actually undergone some financial training. Hello, can you hear me? Hello.
Yes, ma, you can go on, ma.
Okay,
Yes,
okay.
ma, we can hear you, ma.
Yes, because we are told that it is not advisable for one to take a loan to start up a business, but you can use it when you want to diversify. So I don't know your take on that. Then secondly, I don't know the advice you give to us, those of us in academia and in academic, because when we get paid, we have other things we use our money for instance, for publications, conferences, and the rest. And most times you find out that you don't even have much savings, especially in the economy of today. So what should be your advice to us? Then thirdly, please, can you provide us with links for those investment platforms? And please, this one is to age. Some of us were unable to join the WhatsApp group, and as such, we will not be able to fill the feedback form. I don't know how it can be of help to us. Thank you very much, and have a nice day.
Thank you, ma'am. The secretary attend